and of course all eyes on central banks globally at the moment, and as they're watching the latest data at the same time, let's get a little more detail. Pete McGuire joining us from XM. Pete, good to catch up with you again on a Monday morning. These weeks are rolling around pretty quickly at the moment, and everything's flashing by because there is just so much action at the moment. So what are you watching this week? I guess we've had a lot of Fed speak in particular, yep. But let's actually start there then in the States. What you made of that commentary coming out of the Fed post the blackout?
Well, I think, Andrew, and good morning, and the weeks certainly do go quick. So I think I'm looking at the sentiment and far as US dollar index, what happens as far as equities, and we've seen that, a little bit of a mixed bag Friday. Nasdaq up nearly 1.5%, and the Dow, down about 0.15. So it seems to be a little bit of a mixed bag. Maybe the equity markets are a little bit oversold at the moment. There could be some good bargain hunting there. I'm looking at flash PMIs. I'm curious to see what goes on as far as the general theme with energy prices over this Northern Hemisphere summer. So there's a bit to keep an eye on, and of course, the interest rate dilemma and inflation.
Yeah, well, inflation. So what we've got this week, we've got numbers, out of Canada, Japan, the UK?
Yeah, the three of them, inflation data out of the trifecta. So I'm not expecting any surprises from Japan, but certainly when I look at UK, Andrew, 9% or 9.1 we were for April year on year. May's going to be an inch up a little bit higher, and I'm curious to know where we are in August. We could be at 9.5%, so that's not a good sign. Canada seems to be continuing its uplift as well. So how they're going to manage it, interest rates, what the focus is going to be on central bankers globally, recession fears mounting. And the Bank of England, they had their fifth consecutive rise last week, up 0.25. So, yeah, it's game on.
Yeah, as you say, recession fears mounting, obviously, in light of where interest rates are going and elevated inflation remaining. So that's why you're looking at those PMIs, for instance, at the Eurozone, as to whether the economy is slowing.
Absolutely, and that's I think for any trader, if you're looking at the technicals naturally, but you've got to look at some fundamentals. They'll give you a heads up as what we're expecting from manufacturing, demand picture, retail sales. All of those data points need to be considered when you're trading the likes of euro or you're trading yen or any other currencies, Andrew. So it's just a wake-up call, and it just gives you a heads up where we are in 6 weeks' time when a market does take a reversal or does do something strange. And it's certainly been a strange 5.5 months so far this year.
Yeah, absolutely. Hard to keep up, as we said. Pete, you mentioned currencies there. The King dollar, the greenback, maintaining that strength to the detriment, of course, of other currencies. Do you see that persisting?
I do, for in the short term, Andrew, and I think that where we're looking, I'm just looking at yen 135. Who could have imagined it? Euro at 105. So it's a great time to travel if you're traveling with greenbacks. The overall momentum may be a little bit stronger here. It's going to whipsaw, no doubting that, because we've seen big moves over the last month, down to as low as 101, up to 105.5. So when you're talking about the basis points on that, it's a huge move, and that's the excitement as far as currency trading, because it doesn't stop. It's game on, and it's not for the faint-hearted, but it's certainly one of attraction because of its liquidity and the size of the market.
So how are you seeing the Aussie at the moment? It did push back above 70 US cents. But once again, it's all dependent on where that US dollar is going, but also clearly the outlook as far as China in particular is concerned.
Well, exactly right. We play in their coattails, so I'm just looking at that now as far as the Aussie. Yeah, you're sitting 69.4. So it's been an incredible market as far as volatility to trade. It's up one day at 71.5, down at 68.5. So it really is whipsawing, and that's again another example. That US dollar moves, we move, and we're worrying about what's happening in China. So all of those big, I think, attractive points really go into the meat and potatoes of currency trading and what's on everyone's radar. So I'm looking at China. I'm curious to see what's going on globally over the summer, and it's certainly been, I think, the next 5.5 months they'll marry this one. It'll be an incredible year when we look back on 22.
Pete, you mentioned equities earlier there, and I guess questions. You say a lot of those stocks. Some of them looking particularly cheap, of course, but you need to be brave if you're going to weigh back in, even if you're trying to find a bottom. But particularly the S&P 500. Questions of whether that has bottomed.
Well, exactly right, Andrew. I think it's too hard to, try and put a forecast out there when you've got choppy conditions like this or major sell-offs. So I'm looking at inflation. I want to see what goes on, mood and sentiment over the next, say, 6 to 8 weeks will set us up to where we are. I want to see earnings come through. I want to just take on board the general theme of things. You can't get away from what we've experienced as far as the Nasdaq over the last couple of months and that massive sell-off, and that'll drag everything probably a little bit lower from here. So, yeah, brave is one thing, and but you don't marry a trade, Andrew. That's the other thing. Marriage is a lot different to trading, and trading is all about taking opportunities, and that's the attraction with the markets at the moment. Plenty of opportunities.
Yeah, absolutely. Pete, all right, so we began there talking about Fed speak. We're also going to be hearing from our own central bank with Philip Lowe speaking later in the week too. Do you get the sense we're going to get greater confirmation as to where he's going to take rates?
I think so. I just want to listen to what he has to say, and the general mood, what the analysts make of it, and we're aware of what we've got coming out this week. It's just a day-by-day proposition, Andrew. As the data drops, it has an impact to the markets, and I want to gather sentiment, confidence, all of this. I mean, we can't get away from it. We've got inflation at, I think, galloping away, so we've got to be aggressive here, and we're just sitting back watching and observing and seeing how quickly Lowe and the boys possibly take a similar stance to Powell.